Madam Chair, thank you. Thank you for bringing this bill up. This is a small little bit of medicine here after what has been a pretty vigorous 2 days we've had in this committee. We've had two major reauthorizations with TRIA, which I hope will have a wide bipartisan vote, and I appreciate Chairwoman Waters and her staff for working with the Republican side of the aisle and Republican staff for that bipartisan reauthorization. What we have before us is a cybersecurity bill. The Capitol One breach this summer is yet another example of how fragile the security of our personal data remains, even years after similar intrusions at other financial institutions. What that shows is there's a massive risk out there, even for good actors and solid players. But there's a broad lesson that goes overlooked when breaches like this occur, and that is how cybersecurity lapses could one day undermine the resilience of the financial system itself. This is why I've introduced this bill, which would require our banking regulators to provide a detailed analysis to this committee on their cybersecurity efforts and the emerging threats facing our financial system. The need for our regulators to think hard about cyber-related risks is clear. One recent survey found that no less than two-thirds of large financial institutions had experienced an increase in cyber attacks over the previous year, with 79% of them concluding that hackers were becoming more sophisticated. At our April hearing with bank CEOs, leaders from 5 of America's 7 largest banks identified cyber attack as the biggest risk they faced, not productively having growth here at home, not political upheaval in Europe, not even global economic slowdown. Threats to cybersecurity top their list. Fears surrounding cybersecurity aren't merely related to stolen money, though they can be. For instance, a hack of Bangladesh's central bank in 2016 convinced the New York Federal Reserve to wire $81 million to an account in the Philippines, after which it was siphoned off to culprits from North Korea. Had other transfers not been flagged, up to $1 billion could have been lost in that heist. Perhaps even more alarming are the cyber attacks that take aim at the type of data financial institutions collect. We're not talking about username and passwords here. We're talking about financial institutions being hacked and getting name, address, date of birth, credit scores, transaction data, social security numbers, even linked bank account numbers. With this type of information, a bad actor can create a new identity with your information called synthetic identity fraud, and then fully use that identity to get other types of credit. There are countless horror stories where identity theft victims could not even answer their own security questions because cyber criminals had their personal identifiable information and reset the victim's safeguards. The financial system poses a unique challenge. Because of its interlinked nature, even a targeted attack on an individual institution could have effects that resonate not only to the people affected, but also our global financial system. Take just one example, the Federal Reserve. In addition to managing interest rates through the buying and selling of securities, the Fed settles $35 billion in global payments in just the first hour of each business day. A hack of the Fed could be only partly successful and still have massive and devastating consequences. Or consider the U.S. stock exchanges. In 2013 and 2015, the NASDAQ and New York Stock Exchange, respectively, went offline for hours due to software issues. In 2017, a computer glitch led to incorrect prices being displayed for major technology shares. It's a sobering thing to consider how the technology might respond if such problems were prolonged and impacted even more publicly traded companies. Preventing a worst-case scenario won't be easy, but with increased vigilance and reporting and information sharing, policymakers can be partners in preventing these scenarios. That's why I've introduced this bill. We need to understand what kinds of threats the banking regulators are seeing. Congress should understand what these regulators are doing internally and in collaboration with financial institutions and government partners, whether in the U.S. or abroad. Policymakers here on Capitol Hill need to be read in. More than a decade after the Great Recession, we too often look to the rearview mirror when thinking through ways to steer clear of future crises, focusing on attention on threats that have played out already. But future crises A future crisis might hinge on the very infrastructure of our digital financial system, and that is unprecedented. We should renew and fortify that infrastructure before we're forced to learn what life looks like when we've lost control over it. I'm grateful that Chairwoman Waters has brought up this bill, and I hope that we can get a wide support for it. I yield back.